Innovation, agility, impact. Welcome and thank you very much for joining the Kommunalkredit annual presentation call on our results in 2022. My name is Bernd Verslage, Chief Executive Officer of Kommunalkredit, and I welcome you to the session. When we go through the business of Kommunalkredit, I guess the obvious first question is, who is Kommunalkredit and what is Kommunalkredit standing for? It is an institution that has a unique and a full service product spectrum that focuses primarily on two sides of the business. On the one hand, public finance, which is a business with the federal states and municipalities and public sector enterprises. And on the other hand, it's infrastructure and energy business across Europe in the fields of energy environment, communication, digitalization, transport, natural resources, and social infrastructure. The business itself is funded by a combination of covered bonds, senior unsecured issuance, and customer deposits. When we do take a look for a second in the market within which Kommunalkredit operates, the most outstanding to recognize is that since more than a decade, the market is growing. The market has performed resilient, and the market is for sure a beneficiary of the current situation of the macro environment. Whether it is the structural features of the European Union's Green Deal, whether it is the national climate targets, whether it is the reconfiguration of the European Union's energy mix, our shifting demographies, the response to COVID-19, as well as the change in the paradigm shifts on our working and learning patterns, Kommunalkredit will benefit from such structural factors and tailwinds in the sector, a sector that is highly resilient as an asset class, that is largely independent of economic cycles, and notably that has a structurally very low default rate. Embedded in this context, Kommunalkredit looks back to an excellent year, labeled by strong performance, regardless of the global challenges with the Russian war in Ukraine, regardless of still supply challenges in the supply changes as a result of the COVID pandemic, regardless of growing interest rates and high inflation levels. We at Kommunalkredit have delivered an outstanding result and look back to an increase in our net interest income by close to 60% compared to 2021 with a result of euro 126 million. That has fueled our operating result, which has grown by 42% in a year-on-year comparison to euro 85 million. And we have delivered such with a very high level of efficiency. The cost income ratio of the bank on a standalone basis is 41.9%. The combination of the performance, the high cost discipline has delivered a result before tax of 99 million, which is an increase of 48% compared to the previous year, and a return on equity at a high Tier 1 ratio of 19.4%, with a result of 28%, and a return on equity after tax of slightly above 22%, and thus the bank has delivered an outstanding profitability combined with a high asset quality, an average portfolio rating of A-, and an impeccable 0% non-performing loan ratio as ever since our privatization in 2015, putting us at the forefront of the performance of European financial institutions. What does that mean on detail? If you're going to move on, we certainly see the sustainable growth in the segment and the sustainable growth of our own loan portfolio that has grown over the past 3 years by a compound annual growth rate of 11%. In this context, resilience is a word that matters. It is not growth on its own. Resilience in the context of the various economic cycles that the banking sector faces as its own challenges. We have committed ourselves to long-term growing demand of the banking sector, but more importantly, we have committed ourselves to fund the energy transition, the digitalization, to contribute to zero-emission mobility, to elderly care, and to public health. In this, we have grown our loan portfolio, we have grown our new business, and we have a well-distributed loan portfolio across the different subsegments of public finance, whether it is on the Austrian level, European Union's level, the non-EU level, or public sector entities, equally as across utilities, infrastructure, and energy financing in corporates distributed notably across Europe. In this growth, one of the most important features to us is our contribution to society. Contribution to society in the context of the business we are undertaking means sustainability. Sustainability being a key anchor in our day-to-day business. We are focusing primarily and predominantly on two areas. One is the acceleration of the green transition, and the other one is helping everyday people's life. And the way we're going to do this is that we lead large proportion of our funding in the acceleration of decarbonization, to the focusing on renewable energy, hydrogen, and other new and innovative technologies, as always said, with a high level of discipline in terms of risk. This is being supplemented and complemented to helping improvement of our people's life, and this means funding to a large degree social infrastructure and the connectivity of mankind, of people, as we have seen before in the COVID pandemic, the changing and paradigm shifts in the way we work, in the way our children learn. When we look into this, we are committed to deliver by the year 2025, 40 to 50% of our annual new infrastructure and energy business to support exclusively the green transition, and over and above, not to be only a passive lender, that we contribute 10% of our new annual infrastructure and energy financing towards new green solutions. Whether this is storage, whether this is green hydrogen, whether this is ourselves contributing by selective equity investments in spurring the transition itself. And on the other side, to contribute more than 30% of our new annual infrastructure energy business towards social infrastructure, which is also including the digitalization, the communication of people to each other. When we look into our 2025 commitments and translate them in our 2022 deliveries, we have had also on that front a great year of success. 39% have already delivered towards the green transition. 2% of our investments contribute to both sustainability criteria, whether it's on the acceleration of the transition or helping the people's life. And thus, we have already exceeded the lower threshold of what we want to deliver in 2025. On the support of people's life in terms of digitalization, social infrastructure, we contributed in 2022, 52% of our business. So we have already also there well exceeded what we are striving for in the year 2025, which gives us courage that we are on a good and on a strong path to grow in the right direction. When we look into the underlying financial details, I want to bring across that we have been impactful. We have been impactful not only by the sectors that we have supported, but we have also been impactful in terms of growth and profitability within the institution, with this the condition to contribute further to the sector and to be meaningful within the sector. Our total income has grown by 29% from 128 million to 165 million. We have managed to be very disciplined in our costs, which have grown only by 19% from 64 to 76 million. And thus, we have achieved by applying a very high discipline to manage our cost-income ratio, which has gone down by 13% from 47.9% to 41.9% on a standalone basis for the institution. We have slightly grown our impairment charges, as I mentioned before. We're running the bank again on a 0% non-performing loan ratio. And with all of the above, we have contributed to the lifting of our result before tax from 67 million to 99 million, and a return on equity from 14.2% in the year before to 22.3% with a 16.9% core tier 1 ratio for the bank on a standalone. In summary, we delivered business growth, cost discipline, non-performing loans, and a very efficient use of our capital. Capital, always important for the institutions, always important in terms of to manage the capital in a very disciplined fashion. And as we want to be impactful in the market, one of our ambitions is to continuously grow our capital, which means to pay on the one hand an attractive dividend, but on the other hand also to retain earnings to the extent we can, given that we do know to employ our capital and want to contribute by an attractive valuation of the institution to make the capital meaningful and not only looking at the capital as us earning our cost of capital. Since 2015, in our privatization starting at 170 million, we have grown our capital position to 494 million. And not only that, we have also delivered to provide a substantial buffer with 21.1% total tier 1 capital compared to 14.1% total capital to undertake our business and represent probably also here one of the strongest capital ratios within the market. How do we fund our business? We do fund our business, and I think we are very attractive offer to investors investing to us by a combination of capital markets tapping and tapping customer deposits. We have shown for the past year a net stable funding ratio of 129% and a liquidity cover ratio of 348%. So what you do invest into as an investor is not only criteria of sustainable growth, it's also the entire embracing of ESG, advisory business, asset management business, structuring activities within this market sector. In our funding, we have a high share of term deposits, which represents 80%. On a balanced asset and liability side, where the liability side actually has a slightly extended tenor compared to the asset side. And we have a liquidity position slightly in excess of 1 billion, which is a super strong liquidity for a small institution of our nature. If you look into our risk profile, we have not bought our successes by engaging in high risk or excessively into risk. Quite contrary, we do benefit from the inherent low risk of the infrastructure and energy sector, plus our tight risk management that have delivered 0% non-performing loan ratio, with an average rating of A- across the entire portfolio and 68% of our transactions being attributed with an investment grade rating. That has been reflected in the ratings. The covered pool of Kommunalkredit is rated stable outlook A+, stable outlook also from Standard & Poor's and Fitch on a BBB- rating for our capital markets issuance, and from DBRS Morningstar at a BBB flat. To matter in the market and to be relevant in contributing to the transformation of society, we target always a double-digit return, which, as a matter of fact, we have delivered so far every year since I'm running the bank since 2018. We are not only outstanding in the industry by our results, more importantly, with a strong tier 1 ratio of, as I described before, around about 17%. We have delivered our results not by buying into volatility, given that we don't trade, not by complex structured products, and not by taking excessively risk, but purely and merely by a tight cost, a tight risk discipline, a very focused execution of implementing our strategy, our business plans, and our business goals. And by that, over the years, we have grown our return on equity to an impeccable 22.3% and grown our total capital basis to 494 million. As you may have seen by our announcement and in the press, we have attracted a new future majority investor who is going to take an 80.2% majority stake in Kommunalkredit once the ownership control procedure is accomplished, which I do expect for the second half of 2023, where this investor is highly welcome to the institution, given following a very in-depth and long and extensive due diligence, the new investor confirmed the current strategy, our midterm plan, the management, and the full focus on growing our business. The contribution to growing our business is not only attending our shareholder structure, but also providing Kommunalkredit with another 100 million capital increase, together with the situation of us retaining our earnings completely. We will be strengthening our capital position in 2023 by 150 million altogether, which is going to give us the firepower to deliver again for this year strong results. With the capital at hand, we will be investing foremost in improvement of our economy of scale, which is already very strong, by keeping the lending discipline that we have kept till to date. We will be further investing into the digitalization to contribute to our unique selling proposition, agile, innovation, and being fast. And lastly, into people to further grow our business on the advisory side, asset management side, and around the whole economic question of ESG. That leads me to the outlook of 2023, where I'm looking very positively into the new year. We believe that the market of infrastructure energy will stay very resilient, attractive, and strong. We will be, as we have done so in the past year, continuously increase our focus on sustainable infrastructure. We will follow our business growth as we have followed it in the past years, and we are comfortable again to deliver for the year 2023 a very strong profitability together and coupled with a high level of efficiency, and as you have always seen in the past years, with a very strict cost control. The incremental euro 100 million capital increase, which I anticipate to be paid into the bank as soon as the ownership control procedure is completed, will further provide robustness to the capitalization of the institution. And with a combination of our track record, with a combination of the results and the outlook, we remain to be a talent pool that is going to invest in talent and attract superior knowledge into the institution. Thank you very much for your attention. With this, I'm coming to the end. For any questions, obviously we stand available, and we would welcome you if you support the future and the further growth of Kommunalkredit and participate in this wonderful and great story that we have accomplished in the past 8 years. Thank you very much for your attention.